Thank you so much for joining us. I'm Marlin Bohling with a look at our ag commodity trade on a Monday. We are joined in-house, in studio, by Chris Swift of Swift Trading Incorporated. He's based in Nashville, Tennessee, which is very close to where we are.
Yes,
so
not too far.
Just, literally a few blocks away. Okay, let's take a look at the grain trade and get caught up on things. A little firmer tone here today. Here we go with a look at the corn market. Right now we are trading 4 1/4 higher. The May is at 360 3/4, and July up 4. We have December 3 1/2 higher at 388 1/4. In the soybean market at the present time, we have the May up 5 3/4 at 890. We have the July 5 3/4 higher, and November 5 1/2 higher at 924 1/2. And over to the wheat. In Chicago wheat, we have May now 4 3/4 higher at 462 1/2. Haven't been able to say higher too much here lately. Kansas City wheat on the May contract, it's up 1/4 cent at 430 1/4. I guess technically you have to say it's higher, just one tick. On the Minneapolis trade, here you go with the May contract. Right now we're up a penny at 555 3/4. So everything a little higher, maybe in some cases not much, but anyway, a firmer tone in the grains. Now this is following Friday's action where we just saw that corn market roll off the edge of the table there.
Yeah, very interesting because they didn't show any big increase in stocks, and they did show a fairly good, I think, close to 2 million acres increase in acres over what the trade guess was.
So what do you think about that?
Well, I thought that was pretty high, but I don't know that they had time to make any kind of adjustments due to the flooding. But, you know, Nebraska, I think, is the 3rd largest production state that we've got, and there's going to be an awful lot of corn missing in that state.
So in a situation like that where you have an extreme event that could have an impact on acreage like that, I guess USDA would have the leeway. They can come up with maybe an addendum to that or an amended report later on.
Well, and they do. They'll come out with actual acres planted. And, of course, they always have unharvested acres that they will assume in there that so many acres either get washed out or disease-ridden or something. But I think this year it's just going to be late for everything. And what we really won't know is until we get into the May time frame how late everything really is. Because it's not too late right now for anything, but you can't get anything in either right now. So
the rumor, I believe Thursday afternoon, if I recall, was that China was in the market, and the rumor on the trading floor was, they bought 1.5 million tons of U.S. soybeans.
Yeah, I saw that.
Then we came in Friday and they bought 800,000.
Yeah,
and the trade was kind of
the
disappointed. You know, and then we had the crop reports. Now today another 800,000. And then some.
Yeah.
But is that a good thing or a bad thing at this point, considering what they were looking for?
Right, and probably not a good thing because they are looking for more. But what I did see this morning was China's economic numbers. They had a report that came out sometime overnight, and it was very friendly. It boosted our equities market up just a little bit, and we came into everything being green this morning on the screen. So,
all right. I want to take a quick look at crude oil, too, if we could. Crude oil market this morning was firmer, and we are up 76 cents, Chris. May at 60.90. Is that going to support the corn?
It won't hurt it any. It won't. You know, anytime energy prices are up, that's ethanol usage too. So
nothing like an honest answer.
Yeah.
All right. Well, I appreciate that. We'll come back in a moment and we'll take a look at our livestock trade on a Monday when we come back after this. We're back with you talking with Chris Swift of Swift Trading in Nashville. Time to take a look here at our livestock trade, Chris. So let's dive into it. Let's put on our hip waders. Here we go. Live cattle. Everything higher across the board here, Chris. April now 55 higher at 126.25. June 78 higher. Check that. Everything just ticked upward a little bit. June 83 higher now at 119.83, and August up 90 at 116.58. Let's roll over to the feeder cattle trade, and right here we have the April contract up $1.35. Now it's at 146.60, almost on the high of the day, and May up $1.40 at 150.18. The deferreds are higher, but not that much. If you look at the lean hog trade, now in the lean hogs, that's been having a lot of volatility here for the last couple of weeks. And we have the April lean hogs 25 higher now at 77.63. That is almost $1.35 off of its earlier low this morning. The May contract down 48 at 80.85. However, it's over $2 off of its earlier low this morning. So once again, it's back at it again, where it'll, as they say, take your head off with the whipsaw action going on.
It is pretty ugly.
So what does that mean?
You know, people are just kind of coming to grips with the volatility and the price expanse more than anything. You've got a huge basis spread now between the lean hog index and the futures, and those will converge at some point in time. And now probably with this width of basis spread, that's all you're going to see from now on is just convergence of the basis.
So are you concerned about that border talk? where they could maybe shut down the Mexican border?
I have not heard that. No.
Okay. It's being threatened anyway by the administration to shut it down, but it's a big question mark. Would that impact the movement of pork? You know,
right. I'm sure it would.
So on the other
Mexico's
hand,
a big buyer of U.S. pork.
On the other hand, a big wild card is China out there.
Well, then that's true. And China, if their economics are a little bit better, then that should help things too. But we've all sat around and waited for the big pork trade to come in, and it just hasn't. And I have read that they have circumvented the U.S. quite a bit with Brazil and Australia. Brazil and Australia, some of their products both have been very well noted coming into China, where ours have not.
So with the feeder cattle firming up more than the live cattle are right now, what does that tell you about the makeup?
Nothing really. Both had extreme volatility the past 2 weeks. 2 weeks ago, you went straight up. Last week, you spent the entire week trading down all the way to the close on Friday. And so we're just a little bit firmer today. But, you know, the beef market still looks really good. If you look at the fat market, you've got just a smaller amount of cattle on feed than what you have had over the past 2 years. You're right at 100%, where we've been 3%, 5%, and 8% over for the last 2 and 3 years. So got just a little bit fewer cattle and just coming into the beef season.
All right. Well, thank you, Chris, for all the information. Good stuff as always.
All right.
So, I appreciate that. Chris Swift of Swift Trading Incorporated, right here in Nashville. There you go.
Thank you very much, gentlemen, as always. Yep.